So I know I haven't posted a video in a while. I've just been so busy with work and I was under the weather for a bit. But here is my July stock market income report. So basically the income I was able to get from trading on the stock market for the month of July with my strategy, which you should know by now, which is writing covered calls and sometimes iron condors. So my main source of income from the stock market in my case is either dividends or option premiums collected. So I've extracted the activity for the month of July and now I'm going to filter on dividends. I'm going to start with dividends. So for the month of July, I collected $19 in dividends from Bed Bath & Beyond. Then I collected $3 from Crescent Point Energy. I collected $16 from Dividend 15 Split Corp. Collected $17 from Financial 15 Split Corp. Then I collected from Macy's. I collected a combined $84 in dividends. And from Western Digital, collected $112 Canadian in dividends for the month of July. So DFN and FTN, these are two stocks that I'm holding only for the dividends, not for capital appreciation. And obviously the other stocks, so Bed Bath & Beyond, Crescent Point Energy, Macy's, and Western Digital are stocks that I bought in order to apply the covered call strategy on them. Western Digital I no longer own. Macy's I still own because the stock has dropped since I bought them, so I did not get the opportunity to get out of this trade. So I still own Macy's. Crescent Point Energy I sold, was able to get out of it. And Bed Bath & Beyond I still own because I basically bought the stock at $16 and right now it's trading at $9. So I still own Bed Bath & Beyond. And every month I try to write a covered call on it. All right, so if we go back to the other source of income I get from the stock market, which is selling option premiums. So for the month of July, for American Airlines, collected $160 Canadian by writing a covered call. From AbbVie, which is a big pharmaceutical company that dropped hard, I collected, this was a very short trade. This was 1 day only. I actually got in before earnings, so collected $116. So this one I got in because it was fairly low compared to the 52-week. It was paying 6% dividends. Also, I wasn't worried if the stock dropped hard after earnings. I don't mind holding on to it and collecting dividends and also selling option premiums every month. But the stock went up after earnings, so it went above the strike price that I was selling at. So I was able to get out, and so I made $116 in basically 1 day. With AMD, which I did recently after earnings, collected $173. So I still own the stock, but I collected $173 by selling the call premium. Afria collected $43. Activision collected $236. Bed Bath & Beyond collected $107. Bristol Myers collected $144. Box collected $44. Chewy, which is about, I think, a 1 week trade, collected $185. Capital One, which was a 1 day trade, collected $77. Dell collected $151 from Dell. Electronic Arts collected $592. Facebook, which was very stressful because it was 100 shares, which is about $26,000 Canadian. So it was very stressful owning 100 shares of Facebook. Couldn't hold on to it too long, but I think it was less than a week. It was 3 days. I made a covered call trade twice with Facebook, once in 3 days and then the other in about 2 days. So in about a week's time with Facebook, made $542 in call premiums collected, and I'm out of the trade, so I got my money back. So this is confirmed profit. For FCX, collected $98, but I still own the stock. So GLD was an iron condor that I closed in the month of July, but I actually opened in the month of June. So it's a profitable trade, but it shows here a negative $29 because that's just what I paid to close the trade for the month of July, but it was actually a profitable trade overall. But the first part of the trade was in June. It was a small profit. I think it was like $25 profit. Grubhub collected a premium of $427, but I still own the stock because the stock dropped below $70, which is my strike price. But once this option expires August 16, if Grubhub is still trading below 70, I'm just going to sell another call option at the same strike price. If it does go up above 70 come August 16, will I get my money back? and I keep my premium of $427 collected. Goodyear Tires collected $61 and I still own the stock. Halliburton collected $120. I still own the stock. Kroger collected $21. I still own the stock. L Brands collected $100. I still own the stock. Macy's, like I mentioned, I still own the stock. Collected $44 in call premiums. Morgan Stanley, I got out of the trade, collected $71, and I think this was about a week. So $71 on Morgan Stanley. Now Netflix here is it was several iron condors with several adjustments. So this one's not going to be too good, and some of them are still open actually. So this is not the final amount for Netflix, but for the month of July, let's see how much I got from Netflix. Wouldn't be surprised if it's a negative amount. So right now it's showing a profit of $347 from Netflix, but this is not the final amount because I still have to close out some trades. We'll see in August what that amount will be. For now, it's a profit of $347 from Netflix, or that's what I collected from Netflix from selling an iron condor. If you don't know what an iron condor is, you should search on YouTube the video from Skyview Trading, Iron Condor. They explain it very well. And that's just the basics. But there's a lot to learn with iron condors. There's a lot of different strategies, different ways to place the trade, different ways to get out of the trade, to close the trade. So once you watch that video from Skyview Trading, which explains the basics, you can watch either videos from Tasty Trade or Options Alpha, which really go into depth with iron condors. And then you've got NEO. I collected $6, so very weak in call premiums. I've got NVIDIA here that I collected $433 in call premiums. Six Flags collected $124. This was also in about a week. So if you look at the individual amounts, I mean, they're not big amounts, but they do add up. I mean, they're better than dividends as well. I mean, these are monthly amounts, sometimes even less. SNC, Lavalin, collected $79. I still own the stock though. So the SPY, so this is several iron condors on the SPY. Same thing as Netflix. Some positions are still open, so it's not confirmed profit yet. We're only going to find out in August, some in September. I actually have some September expiry dates here. So for now, here's what the SPY Iron Condor shows. So it shows me a profit of $181, but it's not confirmed profit because I still have to close out the trades. Collected $132 from Teva Pharmaceuticals. And then I've got some Tesla Iron Condors that similar to Netflix and the SPY. The SPY made a lot of adjustments to it, so probably going to be in the negatives, but we'll see. And some of them are still open, so it's not confirmed profit yet. All right, so Tesla, so for the month of July, all these iron condors combined and adjustments, I'm up $141 Canadian, but it's not confirmed because I still have to close some of these trades. Unit Group collected $106. I still own the stock, but it is most likely going to get sold because I've got a strike price of $7.50. The stock is trading above $8 and it expires August 16. On United States Steel, collected $47 Canadian. I still own the stock. Strike price is 18 and I think it's trading at 15 right now, even after good earnings. And I've got Yeti, collected $194 for the month of July. Strike price of 33. So this was actually going to get called away from me at 33, but I saw that if I buy back the stock, the call option, and then sell the next month's call option at the same strike price, I still make a decent profit of $194, which represents about 5% return in 1 month on a $33 strike. So I'm okay selling the stock at 33, but if I can collect an extra 5% in 1 month, then why not? So that's why I went ahead and bought back the call option and then sold another one for net total of $194 Canadian. So total premiums collected or total income made just from the option premiums for the month of July is $5,289 Canadian. If we add the dividends to it, it gives us $5,541 Canadian. And if we deduct the interest paid, because I'm using my margin account to make these trades or most of these trades, so if we deduct the interest, it's a net total of $4,897 Canadian. So this is my income for the month of July just from the stock market. just from the trades I place on the stock market, which, as you can see right in front of you, is all covered call trades. And it includes $644 in interest. So why do I really love this strategy, this covered call strategy? The reason is when you buy a stock, you like a company, you buy the stock. How can you make money from a stock when you buy it? It just sits there. The only way you can make money from it is either the stock pays dividends or you wait until the stock goes up and you sell it to confirm your profit. So when I buy a stock, I don't know if I bought it at the lowest point. I don't know if it's going to go back up right away. It might go down. It might take forever before it goes back up. So I've realized that in the long run, you might be right a few times. You might get some home runs a few times, but you're not going to be consistent. And I've realized that I've bought some stocks that just keep dropping, and I just keep waiting forever, over a year, till they recover. But with this strategy going in, I buy a stock knowing that I'm going to sell a call option on it right away. As soon as I buy a stock, it generates an income for me right away from day one. Could be 2%, could be 3%, could be 4%. And I know in how much time it's going to generate that income. Usually I go for 30 days. Now, two things can happen after I buy the stock and it generates that income for me. So let's say I buy a stock at 30. I accept to sell that stock at 30, but in return, I collect a premium of $1.50, for example, in 30 days. But I collect that $1.50 right now, which is $150. So I buy 100 shares of a stock at $30. That's $3,000. Right away, I sell a call option at a 30 strike. That means I'm willing to sell my stock at 30 come expiry date if the stock is trading above my strike price of 30. But in return, I collected $150 from day one. So $150 divided by 3,000 is 5%. 5% in 30 days or 5% in 1 month, annualized, is 60%. So if I can do this consistently every month with almost all my capital, at the end of the year, I'll be generating a much better return than the general stock market. So the hard part with this strategy is to consistently find opportunities where you can buy a stock and sell call options against it. But there's so much action going on every day. The market presents several opportunities. So I buy a stock at 30. If it goes past 30 come expiry date, then I lose my stock at 30, but I collected my 5%. I'm happy. I do it again the following month. If the stock stays, let's say at $29.50, so a little bit below 30, I keep my shares, but guess what? I already collected $1.50 or $150, and then at expiry date, I keep my shares. I can sell another call option at the same strike price of 30. So the first month I collected $150, because the stock is trading now a little bit lower, maybe I'll collect $120, $100. So I'm still collecting a premium every month from the stock just by selling a call premium against it, just by selling a call option against it. Now, the other scenario that could happen is the stock drops a lot. It goes to 25, for example. So I bought it at 30, collected $150, but the stock goes to $25. So what happens in that case is I'm going to keep my shares, of course, collected the $150 already. But now if I want to sell another call option the following month, at the same strike price of 30, the premium that I'll be collecting will be much lower. It won't be $150 or $120. It'll probably be like $20 or $30. Maybe I'll have to take a longer period. Instead of going for a 30-day option, maybe take 60 days, collect a higher premium. Or if I really like the stock, what I could do is buy some more shares. So buy some more at 25. So now my average cost is 27.5. And then I can choose a strike price of 27.5, for example, which will allow me to collect a higher premium. So this is my strategy, is to consistently make these small returns every month as much as possible so that in the long run or at the end of the year, I have a decent return. Because I just got tired of buying a stock and waiting for the stock to do something for me to profit, or collecting only 4% dividends per year, or watching the stock drop some more. And then I have to buy more so that I have a lower dollar cost average. But it still doesn't generate income for me unless it goes up. And I don't know when that happens. And I don't like waiting. So with this strategy, I feel more in control. I feel like I can extract income from the stock whenever I want. I don't control the amount, but at least I can extract income from the stock whenever I want. So this was my July stock market income report. So if you have any questions, leave them in the comment section below. If you enjoyed this video, please click the like button, share with your friends, subscribe to the channel, of course. And if you're going to open an account with Questrade, use my referral code in the description below the video to get up to $250 back. Also check out the other referral links in the description below the video. They might interest you. Thanks for watching.